My name is Nurizatul Azira binti Nasir.
Hi, I'm Anissa binti Ali.
Hi, my name is Iza Atira binti Norman.
We are from EC0211,
And our topic today is
Before I start my presentation, I will show you guys typical question that always been asked in exam. So this is 5 questions, so you guys can read through this slide. So for my topic, I will explain about the approaches in determining the national income equilibrium. There are 2 approaches in determining the national income equilibrium. First is aggregate demand is equal to aggregate supply approach, and the second one is leakage is equal to injection approach. Aggregate demand is equal to aggregate supply approach is AD is total value spending that made by all sectors in the economy, while AS is the total value of output that been produced. So this is the equation function for AD is equal to AS. So for leakage and injection approach, a leakage will downsize the economy that include saving, taxes, and imports. So this leakage will reduce the national income. So injection is an expansion of the economy that includes investment, government expenditure, and exports. So this is the function equation for leakage and injection approach. So for the consumption theory, consumption is the purchase of goods and services that is made by the household of the economy. Consumption is the main component of aggregate expenditure. So income is divided into 2 parts, which is consumption and saving, as this equation. Disposable income is the most important factor that will influence the consumption. For the concept of consumption, there are 2 concepts, which is average propensity to consume (APC) and marginal propensity to consume (MPC). For APC is ratio of total consumption to total income, as this equation. MPC is a ratio of change in total consumption to change in total income, as this equation. So for the consumption function, there are 2 types of consumption, which is autonomous consumption and induced consumption. Autonomous consumption is the expenditure that incurred by the consumer if there is no income, while the induced consumption is the expenditure that incurred by the consumer if there is an income. Consumption function refers to the relationship between the consumption level and the income level, as this is the equation for the consumption function.
Now, I will explain about the factors influencing consumption. There are a few non-income determinants of consumption that will affect the consumption of the consumers. First of all is expectation. Expectation is involve future inflation rate, likelihood of becoming unemployment, and likelihood of receiving higher income. Those expectations will affect the consumption of the consumer. For example, the expectation of an increase in future prices will increase current consumption of the consumer, while the expectation of recession and fear of job losses will cause current consumption to decrease. The second determinant is wealth. Wealth of the consumers will affect their consumption. The wealth includes both real assets, which is houses, and financial assets. Financial assets is such as cash in hands or banks. So, the accumulation of wealth increase will cause the spending of the consumer increase. Therefore, the consumption of the consumer will increase too. The third determinant is interest rate, where the decrease in interest rate will encourage consumers to borrow more credit. The more they borrow, That means the more cash they have to spend. So the consumption function will shift upwards, whereas their consumption will increase. The interest rate increase will discourage consumption, which means when the interest rate increase, the consumer have less cash in hand to spend, so they have to decrease their consumption. The last determinant is price level. The change in price level will cause the shift of consumption function whether upwards or downwards. When the price level is high, that will cause the financial assets of the consumer decrease. So the lower income group will spend less, which will cause the consumption function to shift downwards. Next is the saving theory. Saving is divided into two, which is autonomous saving and induced saving. Autonomous saving is part of the saving that is not related to income and occurs when there is autonomous consumption. Autonomous saving is a fixed savings where it will not affected by the income of the consumers, where the induced saving will be affected by the income of the consumers. Saving is considered part of the income received by the households that is not used for the consumption or expenditure. When the saving will increase when the income increase. The example is, we can see when the income increased from 1,000 to 2,000, the saving will increase from 400 to 600. The concept of saving. There are two concepts of saving, which is average propensity to save and marginal propensity to save. Average propensity to save is the ratio of total saving to total income. The formula for average propensity to save is saving divided by disposable income. The marginal propensity to save shows the relationship between a change in total disposable income and a change in total saving. The formula for NPS is changes in saving and divided by changes in income. Saving function. This is the saving function, which is S equals to negative A plus 1 minus BY. Negative A is the autonomous savings, where the 1 minus B is 1 minus NPC equals to NPS. This is the diagram of savings. Next, I will explain about the break-even income. Break-even income will occur when consumption is equal to national income and the saving is equal to 0. As we can see in the diagram, break-even income occurs when the income function intersects with the consumption function. And at the same time, the break-even income will make the saving equal to 0.
Next, I will continue with the Islamic consumption. So there are several factors that affecting the Muslim behavior. The first one is the belief in the hereafter, and the consumption of goods and service must comply with the Sharia, and it must obey the rules predetermined by the Allah Subhanahu wa Taala. The second one factor is the Al-Falah principle, which is success. It is a vital blessing from Allah during spending to achieve Al-Falah. In Arabic words, Al-Falah means complete happiness in the world and in the hereafter. So the third factors affecting is the principle of consumption of goods and service. And the consumption of goods and service must clean and pure. And the consumer must tie up with the ethical values, which is the goodness, purity, and the nourishment. For example, alcohol drinkers, which are harmful to the mind and the health of men, are not considered as goods because it is prohibited in Islam. And the fourth one is the ethics of consumption. It must interest free loans, prioritizing the poor and needy, caring for animals, spending for the welfare of the future generations, and not spending on briberies and the illegal goods such as gambling. And now is the autonomous and induced investment. Autonomous investment must fix and does not depend on the national income, and other factors that affecting the autonomous investment is the interest rate, government spending and technology. For example, when the income level increased from 50 ringgit to 100 ringgit, the investment rate still maintains, which is 200%. The second one is the induced investment. Induced investment depends on the national income. Since investors attracted by higher national income, induced investment will increase when national income increase. For example, when the national income increase from 100 to 200 ringgit, the interest rate will increase from 50% to 80%. So, the factors influencing investment. There are several factors that influencing investment. The first one is the interest rate. When the interest rate decreases, the number of investment will increase, and the cost of borrowing reduce, which is borrowing loans, and the number of investment will increase. The second one is the price and productivity of capital goods. It depends on the capital goods. For example, machinery that is productive and can yield more output, investment in that machine will be higher because it gives a lot of profit. And the third one is the government policy, which is allow tax redemption and incentive. It's lower the corporate tax as to promote the investment. For example, the foreign direct investment (FDI), which is in Malaysia. And the fourth one is the rate of return. When the cost of investment is higher than the rate of return, it will not give profitable. So when the rate of return higher, the investment will boost. And the last one is the profit. The higher the amount of profit, the higher the investment rate. So some investments in Malaysia financed by the firm from the previous year. So Islamic investment theory, the first one is only permissible activities are allowed, which is activities that are not prohibited in Sharia law. And the second one is the based on the desires of human, al-maslahah ummah, and the needs of daruriyat and hajiyat. The third one is the investment should highlight only well-being besides profitability. And the fourth one is implementations should not against the Sharia law. And the last one, it does not involve any form of riba, which is the additional charge when it's come to